Hi everyone. Today we will talk about the objectives of accounting. So, what are the objectives of accounting? The primary objective of accounting is to create an accurate financial records which helps owners, investors, creditors, and the managers of the organization to, to take the decision about allocation of resources. Okay? And what are the core objectives of the accounting, which are also called utilities of accounting? Now, first objective is to create systematic records. So, in accounting, it helps to create the systematic business records of each and every business transaction so that there are no omissions or no frauds in the organization. That's the objective of accounting, first objective of accounting. Now, what is the second objective of accounting? Is to calculate the profit and loss for the organization. So, you will create the trading P&L account, which will give the business owners a snapshot of how much is the income which is earned by the organization and what are the losses if those are incurred. So, you will record all your purchases, expenses, and incomes to understand what is the profit or loss during the period, during an accounting period. If your revenue is more than your expenses, then it's a profit for the organization. And if the expenses are more than revenue, then it would be a loss for the organization. So, what you will see from or you will analyze from the trading and P&L account is how much purchases have been done during the year. What is the closing stock? What are the expenditure incurred? So this statement would help business owners or investors or whoever or the managers of the organization to control their expenses or increase the revenue. Then third, to know the reason, exact reason for P&L, profit or loss. Why there is a profit, if there is a profit in the organization, if you have received a new deal, you have got a new deal, or you have got new customers added, more customers added during the quarter or something. To know the exact profit, exact reason for the profit and loss. Or in case of losses, what are the expenditure which are incurred where we can control so that we can take care in the future. Then fourth objective is to ascertain the financial position of the business. Now, P&L gives a snapshot of profit and loss during the period. But how will you understand what is the financial position of the organization? To know that, the balance sheet is prepared. So, balance sheet is nothing but financial position as on the date. What are the assets owned by the organization and what are the liabilities organization has to pay. So it gives, and also the capital of the organization, so equity. So this gives owners a financial position for the organization for them to take decision. Now the fifth objective is to ascertain the progress of business year on year. So if you would have seen the financial statements of the organization, you will always see a comparative. So which will help you understand how much the business has progressed over the year. From the last year, compared to last year, this year, how much the business has progressed. What is the revenue has increased, expenditures have reduced or increased, why it has increased. Likewise, for the financial position also, it helps you to understand what was your asset base last year and what is the asset base this year, and liabilities which you have to pay versus current year. So it helps you to understand the progress of the business year on year. And the other objective of the business is, or the accounting is also to detect any kind of errors or frauds. And not only to detect, to prevent also. So how they do? They put the internal controls into place to ensure that all the business transactions are recorded in a controlled manner. And there are enough controls in place to prevent or detect any errors or frauds. Seventh objective is to provide the information to various parties. Not only the creation of information, financial statements, P&L, balance sheet, and cash flow is important for the organization, but what is also important is to communicate those results to the external parties so that they can take a decision whether they want to invest in the business or not. So you will see the shares of the business going up and down basis what are the results of the organizations. It also helps creditors or any owners or banks, employees, everybody to take an informed decision about the organization or the health of the organization. So these were the seven core objectives or utilities of accounting, which helps for owners, investors, etc., to take the informed decisions. Thank you.